without further ado, the person you all came to see, I'm sure, Judy Snyder of Corporate Cost Control is our unemployment compensation partner. She is an unemployment compensation guru. She's amazing. She knows so much. We were just talking before we got on the Zoom this morning about how things have changed so much just in the last year and how there's so much new information. So we get a lot of questions on Hotline about unemployment, and we've had Judy on before in these weekly town halls. We thought it'd be a great idea to bring Judy back to answer some of your questions that I'm sure you all are interested in. So Judy, just remind you that you're muted. There you go. And welcome. Take it away.
Good morning, everyone, and looking forward to sharing the information with you. You're going to find this presentation is absolutely full of acronyms. I do unemployment 40 plus hours a week, and I am still confused from time to time. If you all remember the downturn in 2009, it was pretty simple: regular unemployment, then tier 1, tier 2, and tier 3 benefits. They didn't do it this way this time because there's a lot of federal money in and everything's got an initial. Also, before we flip off of this slide, I just want to let you know that Corporate Cost Control is now part of Experian. So my email address has changed for those folks who do converse with me regularly. My new email address is judith.snyder@experian.com. Next slide. The president in December signed new legislation, and it was the CAA, Continued Assistance for Unemployed Workers Act. Basically what that did was it extended the CARES Act benefits through March 14th or March 15th, depending on whether your state does a Saturday or a Sunday weekending calculation. It also created a new program called the Mixed Earners Unemployment Compensation Program, which is MEUC, for certain individuals engaged in self-employment. Next. Okay, great. So what I want to do is I want to go through the different levels and explain what they are. And as you can see, everything has its initials, and it's no wonder if you've been getting claim forms and you're confused, because like I said, many days I'm looking at paperwork going, holy cow, where do I start? The first one is the Federal Pandemic Unemployment Program, which is FPUC. And you're going to see when you get any claim forms, they're going to be coded across the top with an initial, either FPUC, MEUC, PEUC, so you know which program it is, because that's very important before you can even start to dig into a problem or to even determine, am I being charged for this claim? Okay, the Federal Pandemic Unemployment Program, the FPUC, was that $600 that everybody was getting for a while. Now it's $300. And that is for anybody who qualifies for unemployment, any of the programs. They get this, it's basically a bonus payment. Right now, this bonus payment is $300. It does end on March 14th. They made it retroactive back to December 26th starting December 27th, because the CARES Act ended December 26th, this tacked on right there and moved forward without pause. However, 6 states are having problems making the payments, getting them done. Pennsylvania, of course, being one of the 6. So there may be folks that should be getting it that aren't getting it yet, or maybe never get it. Not sure. They're having computer programming issues. The second is the Mixed Earners Unemployment Program. This is new, and this was part of the CAA that was just passed. It's called the MEUC. And what that is, that started as, believe it or not, the musicians union lobbied Congress to have that done, because in order to get uh, unemployment benefits, you have to have a certain level of earnings. And apparently, musicians work, a gig here, a gig there, maybe wait tables in between. And though a lot of these folks were working fairly steadily, their earnings did not equal a level that would qualify them for benefits. So this program was, so if you have someone who has self-employed earnings and works a regular job, this is the program they should be applying for. They also add an additional $100 bonus to the weekly payout in that, because of the fact that the earnings are usually fairly low. The next is Pandemic Emergency Unemployment Compensation, which is PEUC. And that's for people who have collected and exhausted all their unemployment benefits. So bottom line, I collected regular unemployment. I collected for 26 weeks. I'm still out of work, and my claim is exhausted. What will happen is the state will automatically move you to the Pandemic Emergency Unemployment Compensation. And that is another 24 weeks, which when you add it to the 26 weeks of regular benefits, that does stretch the unemployment benefit amount to a total of 50 weeks. Again, hearkening back to 2009, I'm sure there's a whole lot of you that remember till they got done with regular unemployment, tier 1, tier 2, and tier 3 benefits. They did have unemployment benefits for claimants for 99 weeks. So we're not there yet. But, who knows when the stimulus package comes through, what's going to be put on top of that. Next slide. Great. The next is Pandemic Unemployment Assistance, which is PUA. And that's the one that you all hear about, that is for gig workers, 1099 people. So they are straight up self-employed people who have no other income from, if you want to say insured or covered employment. They're straight up 1099 people. And they did expand the eligibility for this program from 26 weeks to 50 weeks. I was going to say also, this is the program that has had a huge amount of fraud in it. Basically what they do is they take a real person's name and a real person's address, the crooks, a real person's name, real person's address, fake social security number. They file for PUA, and then what happens is that when the state goes to research it, bottom line, there's no wages for Susie Q under this social security number. So then what happens is they grant the claim, and then the person has to prove that they have outside income, and there's got to be some sort of paperwork that these folks are putting in. And I think it's really suspicious, because when you look at the 4 quarters for the base year, first of all, they're all high earners because they want to get a maximum benefit amount. Second of all, if you look at the numbers on these PUA claims, the bad ones, it's like the first quarter, I just saw one Friday that was 15,000 for the first quarter, 16 for the second, 17 for the third, 18 for the fourth quarter. I mean, doesn't that look suspicious? But nobody flags it. They pay the people. And then what happens is this person is going to end up getting, because they have the right name and the right address, they are going to get from unemployment a 1099-G. And I'm sure you guys have heard the news stories about this in right now. People are getting shocked. They're getting 1099-G in the mail for, you know, $12,000 in unemployment that they have to report as earnings and pay taxes on that they never got. So this is an awful, awful issue, plain and simple. Hopefully, well, it's going to take them a couple years to fix it. That's all I'm saying. But we do have fixes for those who have been scammed and have caught it. So anyway, the next program is the extended benefits, and that's always been around. For example, in Pennsylvania, extended benefits were always there. They are paid by the federal government, and they kick in when unemployment is over 7%. So right now, obviously, unemployment's over 7%, and the extended benefits are being paid to those who have exhausted the PEUC benefits. So you've got 26 weeks of UC, 24 weeks of PEUC, which makes 50 weeks, and then you add an additional 13 weeks of EB, extended benefits. Right now, someone could go out to 63 weeks. The bonus benefit payout that we were talking about on all the, you know, for the different programs, that all goes away on Saturday, March 13th. So, you know, that's going to be here faster than you know. Next slide. Okay. Basically, a couple things that are very important to know. Number one, then you say, well, why do you have all these different programs? Well, when a claim is filed, it's only good for 1 year. So you can only file unemployment once a year. If you filed, say, at the beginning of the pandemic, and it was a benefit year beginning March 21st, 2020, that claim is going to end March 20th of 2021, so a year later, a day earlier. And a claimant can only file regular UC once per year. Okay, so there's two ways a claim ends. Either it exhausts or it expires. Okay, in this case, I filed in March, the end of March. I collect April, May, June, July, August, September. That's 6 months. By September of 2020, my claim would have been exhausted. I would have used all 26 weeks of my benefits. That's when, at that point, PEUC would have kicked in. And then if it, you know, went further, the EB, okay? The second way a claim ends is it expires. If you file a claim, you collect for 6 weeks at the, you know, and you get a job after 6 weeks and you never file again, on the anniversary date of that filing, that claim is going to expire. So if you have some other employment separation issue come up, it would be a new claim that would have to be filed. If a regular or UC claims exhausted, that state will automatically move you from program to program to program. So as an employer, it's really important that you remind your folks who are out due to COVID-related business downturn to continue to keep filing for benefits. This is when the you know, the rubber hits the road on the 14th and 15th of March. If this new aid package is not passed yet, your folks still need to continue to file because they won't get retroactive credits if they're not filing. And I do believe that the new package is going to tie in to, you know, beginning March 16th or 15th. Also, if your claim is expired and you have a separation, a claimant has a separation, they need to file for the PEUC just straight up rather than through the unemployment portal. Lastly, both claimants in these situations would qualify for the additional bonus payments. Next slide. All right. Let's see. All right. So it's very important that each program has to be exhausted before a claimant can move on to the next one. So, you know, UC, PEUC, EB, you have to take each of those steps step by step, and the state will move you from program to program to program. So you do not need to do anything. The problem that we have sometimes is that claimants, rightfully so, have no idea what to do. They file for unemployment, if they can even get through, and all of a sudden they're filing for UC, PUC, PEUC, like, let's keep filing for anything and everything. The problem is when they do that, it only confounds a slow system, because then they have to look at all the different angles and determine, you know, what should this person be getting and where should they be collecting. So it's very important that your folks, you know, try not to get crazy and file a whole bunch of different, you know, claims when they should only be filing, say, a straight unemployment claim. Next slide. Okay, this is from the Pennsylvania website, and it's I actually like it. It's fairly simplistic, and you know, it works for all of them. Basically, you know, most states. If you worked as an employee in the last 18 months, you file a regular claim. If you were self-employed and an employee, you file the regular UC claim. They must be running their MEUC program through the regular UC program. If you've already exhausted your claim, again, you file directly for the PEUC. If you've exhausted both your regular unemployment and PEUC and don't yet qualify to file another claim benefit year, then the extended benefits would be what would kick in at that point. Again, it would be automatic. And if you're denied for the PUA claims, which I think is really weird, they're requiring that you file for they don't want you to file for PUA directly. They want you to file for unemployment, regular unemployment, get turned down, and then take that denial for the PUA claim to prove that you're actually eligible for it. Although from what we're seeing lately, they're not asking for proof at all anymore. They're just processing them. That's why we've got the problem with the fraud. Next slide. The next one you're going to really like. This is from the state of New Jersey. And you guys know, if you do business in Jersey at all, Jersey can take a simple thing and make it pretty complicated. And bottom line, the PA slide would work fairly well, but as a New Jersey employer, you also have to take into consideration they have an earned sick leave law, they have a family leave law, and these are all New Jersey laws, okay? Earned sick leave, family leave insurance, and a temporary disability. In fact, New Jersey employers have in their unemployment payment a disability component. So that's all part of the same system. So you've got all those other issues that muddy the water when you're going to figure out what a person's eligible for. So this is a good chart to tell you which direction you need to look. Anyway, next slide. Okay, the stimulus bill. There was a lot that was in it, but the unemployment part that I pulled out, basically everybody's heard it's $1.9 trillion. It's called the American Rescue Plan. They are expecting a signature by mid-March, but think about that. you get a signature and it's not law yet, and everything runs out on the 14th and 15th. So we could end up with some dead space there again where, the program hasn't been enacted yet, but the others have expired. So to that extent, like I said, make sure you encourage your folks to continue to file even if the program's expired. Obviously, both the state and federal programs will have to be extended past the current 3/14 deadline. Also, this new package proposes a $400 a week benefit, a bonus benefit through September. And the bonus benefit would have triggers, which under the old system, when they had the tier 1, tier 2, and tier 3, it was all gauged to triggers too, which I actually like a trigger system. And what it is that they would look at what the unemployment level is still, what the COVID numbers look like, so it would be adjusted to not only economic conditions, but health and economic conditions too. So it's going to be an interesting deal when it comes down through. So that's the unemployment portion of the bill. The last thing I have, and I have 3 questions from Jane Disher and the helpline that I wanted to go over real quickly that I did not put into slides. The first is, what happens if an employee is out on unemployment and refuses to return to work? In PA, there's a refusal of suitable work form. First of all, the offer has to be comparable in all cases, meaning I can't work Monday to Friday, 9 to 5. Now, all of a sudden, you're offering me Monday to Friday, second shift. So it has to be the same as what I had before, and essentially the same rate of pay. And the offer can be made via phone, verbally, or it could be written, or it could be even email. So email or text. So any way that works the best. However, Pennsylvania is pretty nasty about refusals. And I mean nasty to the employer, meaning that this refusal of suitable work form needs to be filled out within 7 days of the refusal and sent to the local office where the claim originated. And what they'll do is they will make them ineligible for the period of time that that job would have lasted. In other words, if you're giving someone a permanent callback, then that would turn the claim off. A lot of times, refusal of suitable work we use with temporary agencies, because folks many times they'll say, don't want to work, don't want to do that 2 weeks, and that I'd rather sit home. It's the holidays. Well, then they get disqualified for that 2 weeks, that 2-week period. And New Jersey, you have to notify the unemployment folks, and they just get disqualified for the week plus 3 additional weeks. And if anybody has business in Maryland, you get disqualified for the week that you refuse to work plus 4 to 9 weeks additional at the discretion of the claims examiner. So again, that's all over the place. The second question is relief from charges still available for employers? Yes. Although the benefit charge statements are showing full charges right now, the relief from charges folks just haven't gotten to it yet. You should be getting the same relief that you got during the CARES Act through March 14th. I'm not sure what the new bill has on that, but so contributory employers should get full relief, and reimbursers would get 50% relief, and reimbursers who paid the solvency fee would get full relief. Last, if an employer decides to make vaccines mandatory and an employee refuses and they are terminated, would they be eligible for unemployment? Well, that's, I'm going to give you a legal type answer saying that depends. It depends on the business you're in. It depends on the reason for the refusal. I'm sure you all know, you've probably all attended lots of different webinars about vaccines and all. And, you know, if a person can come up with a valid medical or religious reason for refusing to have it, then and you separate them, then they absolutely would be eligible to collect, because then the state would say that, you know, they could work for an employer who doesn't make the vaccine mandatory. So just because they can't work for you doesn't mean they can't work for someone else. So under those circumstances, they would be considered able and available. However, if it's just, I'm afraid of shots, I don't like them, you know, I don't trust the government, that's not good enough, and that would deny benefits. That's pretty much it for what I have, Amy. Thank you.
Judy. I've got a couple more questions from the audience that I think are probably fairly easy for you to respond to. Some employers are finding that they have employees who are still collecting unemployment even though they've come back to work. What can the employer do about that? Or what should they do about it?
The employer can, we're having that a lot. And I don't know if employees think that, you know, I don't think they think the right hand and the left hand communicate at all. So basically, I would take your benefit charge printout showing what the person's collected and do a payroll printout for the same time frame and send that through to the state and ask for a wage audit. And what will happen is, I'm just telling you, if they find out that a person has, you know, sometimes it's just silly, a week here, a week there, but a lot of them are, you know, 10 weeks fully employed and 10 weeks unemployment. That's fraud. And that's serious. So they would negate the entire claim. And if it happened during a time that there was a 300 or 600 bonus from the federal government, that's not only state fraud, it's federal fraud. So people can get in a whole lot of trouble with that. And they would be barred probably from collecting unemployment for a couple of years until they paid everything back and so on. So that's serious.
Okay. And how about, I imagine this is fairly common too. Someone is asking if they had an employee open their claim back in March of 2020, and the employee has gone back and forth between furlough and working. Does that claim close in March of 2021?
Yes. Yes. So they would have to file another claim or file the PEUC claim, depending on how much of their claim they actually collected.
Okay. All right. And then just a couple more, and then we'll let you off the hook here. How about a fraud issue? If an employee experiences a claim being made fraudulently against their name, what can we tell the employee? What should they do, and what should we do as the employer?
Well, it depends. I mean, I think that employers kind of, and depending on the size of the employer, obviously, but the employers typically have been getting involved. The employee needs to file a police report with their local police department, because if you've had your identity stolen, how do you say I didn't get that money if you didn't file a police report? Okay. And then I have documents that actually I can make available to you afterwards, from both the IRS and the state of PA on fraudulent filings and what people need to do to you know, fight them.
And you had mentioned that Pennsylvania is having trouble with the $300 FPUA payment. What do you think that means? Is that going to just be delayed, or is it not going to be paid at all?
Hopefully they would pay it, and even pay it retroactively once they figure out what they're doing. So it started December 27th. So if a person had been out since then and had been filing biweekly appropriately, then yeah, they could get, you know, somewhat of a windfall, you know, all at once. That's what happened with the 600. Sometimes they got backed up on that, and all of a sudden somebody would have a $2,400 deposit in their account.
Great. Well, there were a couple of very specific questions that came through, and I would say to those folks, why don't you reach out to Judy individually and see if either she can help you, or maybe you could retain her to do some work for you, because those are some pretty specific questions.
Send questions.
And we will be sending out the slides in the follow-up email, and that will have Judy's contact information. So thank you so much, Judy. Always great to hear from you. And if this keeps going, I imagine we'll have you back again.
Thanks, Amy. Yeah.
All right. Take care.
Bye-bye.